And welcome to The Bottom Line, where we dig deep into the details of the main business and economic stories of the day. Over the course of this week, financial leaders of the world have convened in Washington for the annual IMF and World Bank meetings to discuss various aspects of the global economy. I am now joined by Piotr Trąbiński, former IMF Executive Director, who has been there this week to tell us more. Hello, and thank you very much for joining us on The Bottom Line.
Thank you so much for the invitation and good evening.
So according to the IMF, global public debt will rise above $100 trillion by the end of 2024. And by the end of 2030, the IMF forecasts global public debt will reach 100% of world GDP. These figures are overwhelming. Would you be able to break down these figures for our viewers, and also how to combat that? Once we reach that, what do we do?
Yes, so the main topic of this year's IMF World Bank annual meetings is focus on key global challenges, and these are the tepid economic growth and elevated debt levels, both on the public and private sector side. And the world is facing high debt levels, and not for the first time. It is not the first time when we have to address this issue. And IMF has long-standing position on this, calling the authorities and calling private sector to address the high public debt levels and to ensure timely fiscal consolidation. This is especially important as we are at the intersection of high uncertainty. The conflicts globally are spreading. The economic uncertainty is very high. We are also facing social unrest in some of the countries, both the emerging economies, but also advanced economies. And we are faced with the effects of high inflation. The prices that we have seen that surge over the course of last 2 years probably going to stay with us. So how do we address this issue? And the IMF solution is very clear. First, address the fiscal consolidation on the side of the public debt, then enable well-thought-through reforms, focus on unleashing growth. That should be focused mostly on the labor, productivity, and capital, and then start communicating effectively, both with the societies, but also between the governments, because there is no way any country can alleviate the high debt levels alone. It is only when the countries cooperate.
One of the main topics that has been making high headlines is the fact that Europe and America, the European economies and the American economies, there is a growing economic gap, and it's only actually going to get worse. But one of the big problems that Europe faces is the aging population and this low productivity. How do we address this if there is a lack of unity amongst European governments? I think that's something that is very, very clear.
So the population aging is also a long-standing topic, especially for Europe and especially for Central Europe, mostly because despite many years of trying different policies, the question of aging population has not been addressed. And the IMF provided some policy advice already back in late 2015, 2016, 2017, presenting that in such a situation, countries have to start thinking out of the box. If increasing the birth rate policies do not work, then what else is in the policy tool of policymakers? Well, they have to think about supporting higher labor force participation, and especially for women. So here, any kind of programs that support young parents returning to labor market and helping them to reestablish their professional position is very important. Second, leveraging digitalization. Now with AI, with different digital tools, people are not necessarily have to spend all the time in their offices. So there is a way to connect family life with professional development. And that's something IMF is pointing to and hinting to those that want to explore this field. Of course, there are other policies, and Poland is a great example of being an inclusive country for migrants, especially in terms of accommodating Ukrainians already before the Russia's invasion of Ukraine, but also afterwards. So these are the policy tools countries can use to help alleviate the pressure stemming from aging population, but nothing going to substitute the natural generational changes that happen in every society. So this topic gonna be a main topic probably for the next decade or so in Europe, but also in some other regions, including Far East Asia.
Yes, I think we've already seen that it's impossible to actually pay people to have children. But anyway, moving on, looking at the growth of Europe and also the main recommendations for Central and Eastern and Southeastern Europe, because obviously this report will be of great interest here. How did Poland present itself against its regional rivals, and what were the main recommendations for this region?
Right. So Poland is an outlier. It's not the first time we are an outlier in the region, but the near-term outlook is very positive. It has improved relative to last year, despite the ongoing sluggish growth in Europe and despite Russia's war in Ukraine. The growth is mainly driven by uptick in consumption, but also the outlook is strengthened by recently unlocked next generation EU funds. On top of this, inflation in Poland declined thanks to a proper policy stand of the central bank. And IMF in its recent Article 4 consultation with Polish authorities indicated that Poland's policy priorities for near-term and medium-term should include balancing of mixed monetary and fiscal policies, and then should be focused on preserving debt sustainability together with strengthening the economic growth of Poland, especially as Poland may face longer-term challenges. So I'm talking about Poland, but those policies and this recommendation is actually true for other countries in the region. Since Poland is the leading economy in Central Europe, I would say it is safe to say that these recommendations of the IMF can be applied with some differences to other countries in the region. Of course, those countries that are already in the euro area, they don't have monetary policy independence. They depend on the policies of the European Central Bank. But all countries should think about medium-term fiscal consolidation, about creating buffers to weather potential shocks, but also on thinking about how to unleash growth amidst the population aging, climate transition, and decreasing cost competitiveness in the region.
Indeed, and obviously we're deeply affected by what is going on in Germany, especially the Polish economy is deeply still intertwined by what is going on in Germany. I wanted to ask you about what Europe needs to do to kickstart public investment, because one of the takeaways from what we see has been discussed in Washington is the fact that Europe needs public investment to kickstart the economy. What do we do to get that going?
I think Europe needs both public and private investment, and it needs to deepen capital markets, including steps towards capital market union within the political institutions that are there, because that would allow Europe to tap into money that are easily available in the US, and they should be available for European companies. So I would prioritize creating architecture that would foster capital markets union and that would enable access to private funds even more than tapping constantly into the public money focused on infrastructure. But if we speak solely about the public infrastructure, some of the Western European countries, they already have outdated infrastructure. So any money, any euro spent into public infrastructure, roads, railroads, energy, and digital has a very high multiplier. So it's a money well spent. If we look into Central Europe, we are still lagging behind in terms of our infrastructure development. So Central Europe should definitely push for more money dedicated to infrastructure investment. But we have to be aware that any type of public investment and PPPs, they are by nature a little bit less efficient than private sector money. So here, strong institutions and effective oversight of any kind of money spent on public infrastructure would be essential to preserve as much money spent on public infrastructure as possible.
And just as we wrap up, in order to achieve that European potential, to get this European economy going, we need to integrate goods, services and capital. But would you say that we also need to focus on united political will? Your last
yes, of course.
On that.
Absolutely. That's the key issue. Europe has to come with more unified stance on what it wants to achieve and what are the key priorities in terms of reforms and of political aspirations the continent has. Without this, there is no substitute for this kind of approach, for a kind of unity and for a kind of clarity of where we want to go and what we want to achieve.
Okay, Piotr Trąbiński, it's been great to have you on The Bottom Line. Thanks so much for joining us today.
Thank you so much. Have a wonderful evening. Bye.
Thank you. And that was Piotr Trąbiński, former IMF Executive Director, here with us today on The Bottom Line. Thanks so much for joining us on The Bottom Line and on Business Arena, which is on every weekday at 5 p.m. CET. I was your host, Marie Cato. Coming up next, World Talks. Goodbye.